Hey, what's up, guys? My microphone is acting up. No, this is annoying. Anyway, let's see. I want to share the screen. All right, good morning, guys. Today is Tuesday, February 20th, and as usual, going over analysis for US 30, gold, and EU. And looking at the daily bias, US 30 bearish, gold bearish, EU bearish, but we are getting a close above, possible close above this daily SAR. So tomorrow, if this daily candle closes above this daily SAR, we might be bullish. I'm sorry, yes, bullish for EU. Dollar bullish, but we can see this heavy downtrend on the US dollar. But here we are retesting this daily SAR. So if you extend it, we are testing support on the dollar. So you can see that's why we're having that big rejection on the US dollar. Now, if the dollar is to keep dropping, we might get a closure below this zone, in which case at that point, we might probably get a daily bearish SAR. But right now you can see the dollar is at a support level and it's rejecting exactly off of that. Now, looking at what we have here for US 30 on the 15-minute time frame, we have a double SAR region right here where price is currently rejecting from. So we go ahead and mark this up as a double SAR zone. And then, so right now we have no trades for US 30 because for us to take this trade, price we'll probably would need a test and rejection entry. So currently right now, nothing on the 15-minute time frame. On the 30-minute time frame, we have this double SAR region as well here on the 30-minute time frame. So we might be getting a test and rejection entry, but US 30 right now, nothing really on the 15-minute, nothing on the 30-minute. When we go to gold, we have this double SAR region right here. Let's see, right there. And I think we have another one. We have too many zones here. Let's see if we had any here. How am I gonna draw this? I hate when we have so many zones concentrated. 2033, so that's one double SAR region. This is another one right here. And then we have this one, it's right here, 2032. Yes, it's still a 10 pip zone. And then we have this bottom one that's right here, 2030.8. Okay, so gold, we might see. I hate when we have so many zones. Reset chart view. Okay, so we already had a test and rejection at the very top. So this was, of course, before New York. So this was a nice test and rejection entry that you'd have gone straight to full TP right there. So if I do this and select for gold, oh, this would be at break even because this is a test and rejection entry of that double SAR region right there. Test and rejection sell. Yeah. So the other thing, and this is something I know when I first started streaming, like last year in March, we used to do ideally supply and demand zones, or we used to do what? Yeah, ideally supply and demand zones, and then we used to do trend lines. So that's how I used to trade last year. So this year, actually beginning mid last year through to this year, right? I came up with the SAR. Well, the SAR strategy has always been there, but I came up with a way I trade it on my a unique way to trade it. But this year, if we look at the returns we've had so far, this whole February, as much as I love trading US 30, I've taken a loss. Almost every loss I've taken here has been a US 30 loss. And one thing I discovered while backtesting is as much as we may get like a test and rejection entry here or like a SAR entry, it's good that we use the zones indicator. So remember, the zones indicator is what we used to use previously before I even started trading SARs. Now, the zones indicator shows us where the buyers and sellers are sitting, right? So here, if I turn on the zones indicator, you can see we have nothing but redness here. Now, the going forward, if I have an SA, I'm still going to be trading the SAR strategy, but before I take any trade, if I'm selling, if I turn on the zones indicator, I want to see sellers sitting there. I don't want to see buyers, because that's one thing I realized for all those, almost all the losses I've been taking on US 30 the last 2 weeks, which is pretty much every US 30 trade that I've taken, other than maybe one that ended up at break even. Most of the times, even though the SAR entry was valid, their corresponding zone was like opposite. So sometimes I was buying in a supply zone or selling in a demand zone. So therefore, right, you get that maybe stop hunt or whatnot. But here you can see this was a perfect entry, right? Again, I don't trade before New York Open, so it's not even a trade I would have taken. But for the people who trade before New York Open, this trade would have already been at break even, right? Because you have the first candle, it tests that double SAR zone that I just drew for you guys. If you shift to the left, you'll see these two SAR lines here. So for gold, for it to be a double SAR zone, it should be no more than 10 pips. For US 30, it should be no more than 20 pips. For FX pairs, it should be no more than 10 pips. So here, the way this I wish it happened on the live session. This was perfect because yes, it's a double SAR, but remember now we're adding another confluence. It has to match the zone. So if we turn on the zones here, we have nothing but sellers here on gold. And you can see, if you guys remember, if you're with me when I was starting this community in March last year, you remember, even in these zones, we have, for example, we have a red zone here, right? But there's areas within these red zones that are redder than others, right? So we have this particular one. So remember when I used to call something like a supply zone within a supply zone or a demand zone within a demand zone, right? So that shows you like the optimal point of entry. As much as this whole zone is a red zone, there's zones in here that are redder than others. So if you highlight those, you can see they're corresponding to our SAR zones. So, but anyway, yeah, going forward, before I even take any SAR trade, I will be making sure that the zones correspond to the trade I'm taking. So this was a nice gold trade that happened pre-market. The other one that I'll also be using, remember, we also have the markups indicators that shows us order blocks, right? So it's nice to see where the order blocks are. So here you can see we have a daily bearish low, but we also have a daily bearish high for gold at 2039. So gold is probably going to come back to 2039 before falling down. And we can see if we turn on the zones indicator, look at that, around the daily bearish high, we have this supply zones within supply zones. So these are the optimal entries, even when you get the SAR zones around that region. But anyway, that's just something that I back tested. It's something we used to use last year, but for some reason I stopped using it. I guess I just had too many strategies and maybe analysis paralysis. But right now, so this was a nice trade, but I think gold is gonna come back up and go for that daily bearish high at 2039. So I'll just go ahead and delete that for now. Here we have another double SAR zone, so we might get a break and continuation entry perhaps. And here, this break and continuation entry, we do know that there's a daily bearish low here. But anyway, we would have to wait for the next 8 minutes to even take any trade on gold on the 15-minute time frame. Also for this sell signal right here, this is a valid momentum sell. This is to mean that if gold comes back up here, this would be a nice selling area for gold. The reason is this is a valid momentum sell. It's not the highest candle of the retracement. The previous 1 to 5 candles had rejected off of an SAR line, and price was below the HAL moving average, HMA. So that's why. So this is a valid momentum sell. So if gold comes back here, we have a possibility of this. But knowing that we have a daily bearish high up here, I would rather wait to sell gold at, where's the daily bearish high? At 2039. So I would rather wait to sell gold at 2039 instead of trying to catch this momentum sell here. So I'll go ahead and remove this. On the 30-minute time frame, we have so many SARs here. Let's see. This right here is a valid momentum sell right here, and it's around entry. Give me 1 second. I want to see. So I'm not in this trade. Give me 1 second. There's something I want to check. So EU is fully bullish on the 15-minute and 30-minute time frame. Uh gold is 50-50 on the 15-minute time frame. On the 30-minute time frame, gold is it's also 50-50 as well. So again, knowing that we have that daily bearish high around 2039, this is not a trade I would be looking to take personally, but this is a valid momentum sell right here, this trade right here, this momentum signal, because if you remember, for momentum sell, those are the requirements, right? Signal candle wasn't the highest candle of the retracement. Previous 1 to 5 candles had rejected off of an SAR level. It can be a single SAR, and price was below HMA. So normally for this trades, what you want for price to come back and touch that entry and then go back down. Again, if you'd taken this before New York Open, this is why I don't trade before New York session, you'd have been faked out and price comes back to your entry. But again, knowing that we have that 2039 level for the daily bearish high, yeah, that's not a trade I'll be looking to take for now. So I'll wait for the daily bearish high. But if anybody has a confluence for gold sells right now, yes, we do have that momentum sell. For me, it's just that, especially weekly and daily order blocks, I don't like trading against them until they're mitigated. EU, nothing on the 15-minute time frame here, nothing on the 30-minute time frame. Let's see, wait, actually. And I really don't want to be trading EU. EU is just a slow-moving asset for me, so I don't see anything here for EU. US 30 on the hourly time frame. This was another nice trade on US 30. I think this trade came up last night here. So I was just doing some back testing as well. We had a nice, so same thing, right? So we have a double SAR region right here on the hourly time frame. What are you looking for? You probably look for, so we had many entries here. We had a break and continuation here. You would have waited for price to come back to this zone and you enter a sell up here. We also had this test and rejection entry here, right there. And then you wait for price to come back to your SAR region. If you turn on your zones indicator, we have nothing but sellers there. So that was a nice, perfect trade I saw, but this came like at 11 p.m. last night or something. So this was a nice US 30 trade as well. But right now on the hourly time frame, unless we get a test and rejection entry of the same zone, and you can see how critical this zone is, right? You can see prices coming back to it, but they're unable to, for now, they're unable to break it. But right now on the hourly time frame, and let me switch this real quick. If this is a sell, you want the most optimal region, 64, 44. You know what? Let me leave the other one. So nothing on the hourly time frame. For gold, we have a double SAR right here. So we have to, this is the hourly one. This is the hourly zone right here, 2028.9. So it's still within the 10 pip range. So when I mean nothing more than 10 pips, so the distance between the SARs you're considering double should be no more than 10 pips. So that's what I consider double SAR for gold. For EU, same thing, nothing more than 10 pips. For US 30, nothing more than 20 pips. So here for US 30, we have a possible test and rejection entry right here. So we have your test candle. Your test candle came to your double SAR region, did not break above. So we need this candle to not close above here. So this is a possible US 30 short right here. Possible US 30 short. So what we would want here, we want this rejection candle. So let me mark this up. So this would be test and rejection sell. So possible test and rejection. So it's still not confirmed. We need 2 consecutive candles. So what we want here is for this candle to close above here. For me to take this entry on candle closure, I need this 15-minute candle to close right above here. Like, I'm sorry, right below your SAR region. If this candle closes where it is right now, I'm not going to take the trade. I would wait. This is what I want to see in order to take that trade. And then let's look at the zones indicator. Looking at the zones indicator, perfect. We have nothing but like the SAR region we are trading, which is this. You can see we have a supply zone within a supply zone, correct? But also above that zone, we have another supply zone within a supply zone. So in such an instance, you can either wait for, if we get this 15-minute candle closing below here, you can either wait for price to come and retrace or retest this zone and you enter your trade, or you can wait for price to retrace this other supply zone within a supply zone. But if you're taking sales, or if I'm taking sales going forward, this is exactly what I want to see. Now, what might even be better than this would be if we turned on our markups indicator to see what order blocks we have. So look at that. Where we have our double SAR region, we have a 4-hour bearish low. So that again is perfect. We have supply zone within a supply zone, and then we also have a 4-hour bearish low. Now, the other issue with this, the only issue I do see with this, if you're selling and you have a lower part of an order block, what's the opposite of that? If you have a lower part of an order block, that means you have a higher part of an order block. So you ask yourself, where is the 4-hour bearish high? So if I remember correctly, this 4-hour bearish high is all the way at like one of the all-time highs. So this is fine. Trading this 4-hour bearish low is fine because the bearish high is all the way like at the all-time high. So um, that wouldn't be a red flag for me at this point. The red flag would be if the 4-hour bearish high is maybe above your stop loss. But given that the 4-hour bearish high, the other end of this order block is all the way at the all-time high, then I'm not really worried because it means that it's all the way up here, and that's like what, 200 points or 300 points away. So this is perfect. So I need this candle closes in the next 38 seconds. So I'll go ahead and turn off the markups indicators. So again, remember, if this candle closes where it is, I'm not taking the trade on candle closure, because if I take this trade here, my stop loss, the zone that I'm entering at is about 80% of my stop loss. So for me, I do not want that. So I'll still wait for this trade here. But then since it looks like this candle won't close like next to my zone, let's just see what happens here. 3, 2, 1. Now my work here, in order to avoid FOMO. So again, you don't have to take every trade that I take, but just to show you guys how I trade. So here, to avoid FOMO, I need to mark up where, because my strategy is 1:2 risk to reward. But if you achieve a 1:1, you go ahead and set break even. So right now, what I'm interested to see anybody who's taking this trade right now, at what point would they achieve a 1:1 risk to reward? So I know if price gets to this point, the person who's in this trade right now, they would achieve a 1:1 risk to reward. And according to my strategy, they would be at break even. So my hope or my anticipation is price to come back and fill my order in first before giving this person a 1:1 risk to reward. If they give them a 1:1 risk to reward, that's well and good. I wait for a new trade setup. But if it comes up and gives me my entry, well and good, I know I'll be tapped into the entry. So right now, this is the price action I'm waiting for. I'm waiting for price to come up here and then tap me in and then come back down. And then the 30-minute time frame, we are also setting up for a test. And if anybody has any questions regarding the entries, feel free to just unmute yourself and ask. But 30-minute setup or 30-minute time frame is also setting up for a test and rejection entry. Same thing. And again, remember, the higher the time frame, the better the confluences. So sometimes, or a good amount of times, the higher time frame has a better entry than a lower time frame, but you would have to wait longer. So for example, this 30-minute setup, you would have to wait for the next 30 minutes to see where the rejection candle will close at. So this is US 30. So what we would be looking for here as well is something like this. Let's see here, something like that. And then this is a possible test and rejection. So go ahead and mark that up, possible test and rejection for a cell. And then here we remove the word possible from this since it's no longer like a pending one. It's already, or maybe I should change it from possible to pending. Yeah, I'll change it to pending. So here, this is an outright test and rejection. And then we go back. I think we did what gold analysis. So nothing on gold, nothing on EU. So let's go to the higher time frames. So nothing on the hourly for US 30, nothing on the hourly for gold. Gold here. Okay, perfect. This is another one for gold. So remember, actually, the red zones are the 4-hour zones, so never mind for that. Yeah, the red zones are the 4-hour. But on the hourly one, we might get a break and continuation. So here we have this for gold. Do that, and then we do this and this, and then we label it just so that we know what we are trading. So here, this would be a break and continuation. Break and continuation sell. So pending break and continuation sell, because this is your break candle. It broke and closed below your SAR, double SAR region, and this is your continuation candle. So this continuation candle has to also close below your SAR region. Again, no need to force any trade. We ask ourselves, are there any sellers sitting here? Is there any supply here? Okay, perfect. We do have some supply here. It's not the best that we have, because we do see above here, we have higher supply zones within supply zones within supply zones, but we do have some selling pressure here. Okay, then we go ahead and ask ourselves, look at the order blocks. If we have any order blocks, look at that order block up there, 2035, 2034. And then 2035, 2034, we have a 4-hour bearish order block. 2039, we have a daily order block. So what's the best trade you can get here? Probably, and you can see here, even on the hourly time frame, we do have this double SAR here. We do have that double SAR region right there. And we also, if we go to the 2039 region where we have a daily bearish high, we don't have any SARs there. No, this one is too big. Just a second. This is just one. Yeah, so that one is too big of a zone, 2039 to 2037. That's 20 pips. So there's no double SAR region there. So if we know that we have a daily OB let me turn those off. If we know we have a daily bearish order block at 2039, and then we know that we have a 4-hour bearish order block at 2035, 2036 area. And if we turn on the zones indicator, you see that 2035, 2036 area, we have all these supply zones within supply zones. Look at that huge supply zone within a supply zone at 2040, 2039 region. That is that daily bearish order block. So at this point, right, you ask yourself, would you rather take this trade right here, knowing that we have all that sell side liquidity sitting up here? Or would you rather anticipate for gold to go up and then you catch it on the way back down? Personally, I would rather be safe. I would rather not take a trade today and end up in a loss, but catch that nice liquidity at the top there. But we'll
Do you know if
see.
there's any major news this week?
We have FOMC tomorrow, but it's the
Tomorrow. Just in the
FOMC.
afternoon, right?
Yeah, it's the FOMC without a press conference. So I don't really worry about that one, but yeah, we do have that FOMC tomorrow at Wednesday.
I'm just trying to figure out, is there anything next week then? Because something's gonna melt US 30, NAS, and gold.
Next week we
Don't
might
know.
have NFP. Is NFP the first? Because next week Friday is the first. So NFP would either be the first or the 8th. So Wednesday. No, 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 that's the wrong week. So God, I don't even what date are we on? Sometimes I don't even know those things. February, today's the 20th. So Sunday to Sunday, apply settings. So here, Wednesday, tomorrow, we have that this FOMC might actually drive things. Most of the
That's what I'm
times,
thinking too, because it's almost the end of the month already.
Yeah, but most of the times the news conference, the one with the 2:30 p.m. press conference is the one that drives things, but sometimes it changes. But this one normally is a fake out, like just ranging or something. But Thursday we still have that unemployment claims. Let's see the next week, Friday. If NFP is not next Friday, then yeah, this consumer sentiment is normally heavy as well, especially on a Friday. So that means the NFP then is the 8th or something. But I mean, and US 30 has started the downtrend. So the only issue is this okay, so for this trade, I don't know if anybody took this. So again, this was a red flag to me, but if you took this original trade, or this is where the trade validated. Somebody like me who wants to be conservative, right? I wait for retracement. But if you're already in this trade, then you would be up like so you should be getting ready to set break even. So if this trade gets to this point, so that's the threshold, right? I'll just delete that trade and wait for a new trade setup because I know somebody who entered this trade would be at a 1:1. So that's sometimes you win, sometimes you miss out on a trade. So there's times, and I know we've seen it on the live session. There's times when if you had entered such a trade, would have come out, get stopped out or stop hunted. But again, today it looks like somebody who took a trade despite this overextension. Now, what do I mean by overextension? The overextension is my stop loss is 50 points on US 30. That's what my stop loss is on US 30. Okay. Where the trade validated, which was down here, the distance between where the trade validated and my SAR region is 30 points. That is 70-80% of my stop loss. Personally, it's not a risk I'm willing to take. So that's what I consider overextension. So for me to enter a trade when it validates, the entry candle has to be literally next to my entry point, like 2 points away, 1 point away. So if it starts getting to like 10 points away, then no. So let's go back. So gold, this is a possible trade on gold you'd have to wait for an hour or 50 minutes. EU, we have this entry as well. This is on the hourly time frame. This is a possible test and rejection right here. So we go ahead and mark this up as well. EU test and rejection. But honestly, for EU, I think I'm going to be trading the momentum strategy as opposed to the SAR strategy. Because for me, EU, I normally do like 30 pips TP and 15 pips stop loss. Like I was in a trade for 3 days. I actually closed it out yesterday, luckily, because I would have gotten stopped out. I was holding a trade, I think, from Friday morning till like yesterday night, it was just ranging. So this is test and rejection
Honestly,
sells.
with EU, I if I can't get a 5 pip stop loss or 7 pip stop loss, I don't trade it.
Yeah.
I got to
Yes.
get to a 1 to 2 Quaco one to, and then be out.
Yeah, like Steven is good with EU. Like I don't know, he has like even sometimes 2 pip stop loss. I'm like, nah, that's pretty decent. So anyway, that's the 1 hour time frame. Those are the markups for the 1 hour time frame. So always wait for price to confirm your entry. If we go to the 4 hour time frame as well, 4 hour time frame, nothing on US 30, nothing on US 30 on the 4 hour time frame. Gold, the red zone is a 4 hour zone, but let me see, this is 2032.1, 2031.0. Okay, so that's fine. We have this little zone. So remember 2034, 2035 area, right? What do we have up there? We have a 4 hour bearish high, bearish low. And you can also see here we have that double SAR there on the 4 hour. So here on the 4 hour, this is the test and rejection entry. But here on the 4 hour, this 4 hour candle, you need to wait 2.5 hours or actually 3 hours for it to confirm. So that will be at like 1 p.m. Eastern time. So there's nothing to look at there. EU here, we have the red zones. The red zones are the 4 hour zones. The amber zones are the 1 hour zones. So the red zone here is a double 4 hour SAR region, but you can see is just now being tested. So you would have to take this trade or to wait for this trade to validate, you'd have to wait for 6 hours, 50 minutes. So we're not going to be on the live session, of course. So we go back down to the 1 hour time frame. And then what we'll do, we'll now move on to look for any momentum strategy setups. US 30 still hasn't given this person a one, or did they get a 1:1 risk to reward? I think they did. Yeah. So if anybody took this US 30 sell, you'd have already achieved your 1:1 risk to reward. So if you took this sell, go ahead and set break even. So for me, I'm not waiting for this trade anymore because this person, price has given this person a 1:1 risk to reward. So there's no need for me to chase a trade that somebody else is already at break even at. So I go ahead and delete this setup. But if you're already in that trade, go ahead and set break even. And for me, at this point, I just wait for a new trade setup. If I don't take any trades, I'm perfect. I'm perfectly fine with that because I know there's always going to be other trade setups. Then we move to the momentum indicator. So the momentum indicator, what do we see here? So here on the momentum indicator, this momentum buy here it's an invalid momentum buy. There was no rejection off of an SAR region or SAR zone. So that's fine. So no momentum buy, no valid momentum sell as well here. On the hourly time frame, we go to the 4-hour time frame. On the 4-hour time frame, no, this was a valid momentum buy, but price, it already got mitigated because you'd have waited for price to come back to the low of that candle and you'd have gone ideally, I think this one you would have gotten stopped out. Actually, almost gotten stopped out, but price would have gone up to your TP. So that's the 4-hour. There's no other valid momentum 4-hour buy. No valid momentum 4-hour sell on US 30. There's something I want to see here real quick. I want to see for US 30, I think I thought we were sitting on an hourly order block. Maybe I was tripping. Okay. So nothing there. So we go then to gold. Gold, no valid momentum buy on gold based off of where price is currently. No valid momentum sell based off of where price is currently on the 4-hour. On the 1-hour time frame. And also I noticed this momentum entries come up like maybe at 9 p.m. or 11 p.m. Eastern time. So by then, even for me, I'm normally asleep. So I end up missing a bunch of these trades. But if there's any other strategy I would be trading is this momentum strategy because it has, like even just by visually looking at it, it has some nice entries. This was invalid. But yeah, this momentum entry. So nothing for gold. Then we move to EU. EU, nothing on this is a valid momentum sell on EU. If this hourly candle closes on EU, what then you would expect? You want for price to retrace to that zone, to the high, since we're looking for sells here. And the momentum strategy, you don't have to trade with the daily bias. The momentum strategy, your daily bias can be bullish, but you can take a sell. Your daily bias can be bearish, but you can take a buy. So the momentum strategy, you don't have to worry about what the daily bias is. So here, if we mark this up and we mark why it's a valid momentum sells, the requirements for a momentum strategy, you can see that the signal candle is not the highest candle of the retracement. The previous 1 to 5 candles had rejected off of an SAR region, off of an SAR line, which is this one. And then price was below the HMA. But for this trade, you'd have to wait for the next 40 minutes. And then what you'd want to do, you'd want for price to retrace to the high of that candle, since this just shows you where the sellers or where the buyers stepped in. So this is the difference between this sell right here and this sell right here. This sell is an invalid sell. What makes it invalid? What makes it invalid is that is the signal candle, was it the highest of the retracement? No, it wasn't. So okay, so it checks that box. But when it comes to requirement number 2, had any of the previous 1 to 5 candles rejected off of an SAR region? No. So here you'd have wanted this candle to have rejected off of, at the very least, this top SAR, because it's showing you where price reversed from. So this sell here is invalid, but this sell right here would be a valid sell if it indeed does close as a valid sell in the next 43 minutes. So this candle would have to close either where it's at or a little bit below, because this is the HMA, the Hull moving average. That's what will determine whether it will be a sell signal or not. But this might be a nice trade as well on EU. But given that we might be turning bullish on EU today, it's a little tricky. It's tricky to take that sell. But one thing here, so remember, SAR stands for stop and reverse, can also stand for support and resistance. And remember, since the EU is Euro US dollar, look at the dollar is bouncing off of this SAR region, so support region, quote unquote. So this SAR, this daily SAR might fail to materialize on EU because the dollar might as well bounce back from here. It is very possible that the dollar might start rallying from where we are, but it might also melt down. So it's just a matter of knowing like your confluences and how many trades you're taking during the day. So for today, I'm not sure there'll be any other trade setups. Let's see. There's this 30-minute trade. What time is it? 10:18. So I'll hang around for another. This is also a 15-minute entry, and this is a possible. There's another possible US 30 trade here. Since this is a double SAR region, we might get a break and continuation entry here for US 30 in this zone right here. So for me today, I think the only trades I see myself taking, it's either this US 30 trade and this EU trade, this momentum trade. So remember, personally, I do like at max 2 trades a day because personally, I risk 1% per trade. So we might get, but we have to wait for 11 minutes for this trade to either validate or invalidate. So this would be a break and continuation setup because you have your break candle, break and continuation sell. So it's a pending break and continuation sell. Let me change this to pending. Pending break and continuation sell. Same as break and continuation sell. So we have to wait for 10 minutes to see if this candle will close below here. If this candle closes below here, again, and if I forget to check the zones indicator, you guys remind me because sometimes I just forget some of my confluences.
Not for nothing, advising, but US 30 might be playing out like Nas did earlier with AMD accumulation, manipulation to the upside and then distribution to the down.
Yeah. So this trade setup, I'm not gonna take this pending break and continuation, even though it does close. So remember, I'm only going to be taking trades. If I'm selling, I want my setup to be in the supply zone. If I'm buying, I want my setup to be in the demand zone. So this trade setup is in no man's land. So you can see we have sellers up here on the other side of my stop loss. We have buyers on the other side of my take profit. So I'm not interested in taking this, even though it does validate. So this is another confluence I'm adding again to the SAR strategy. It is, if it does close, yes, it is valid, but you want to trade in the direction of momentum, in the direction of buyers and sellers. So this
you're just saying that because it's buyers down there too.
No. I'm saying here, since I'm looking to sell, I would have wanted to see some sort of seller sitting here. There's nothing here.
Oh, okay. I got you.
And looking at where price is coming from.
There's a order block above that too, you said, right?
Yeah. So, and price is coming out of this demand zone. So here the buyers have the momentum. So yeah. So this is why I got, or if you guys took some of these losses with me last week, and the week before for US 30, when I back tested it, most of the trades were like this. So what they do here, they come up, stop hunt you, pick up liquidity here, come back into profit. So yeah, I would rather just be taking, we might get fewer trades, but we might get, more winning trades. Now, on the other hand, the only other way I can take this trade is if I turn on the momentum, the markups indicator, and I see a high time frame order block here. So this is my zone here. So if there's only a Monday low, Friday low, and there's also a previous monthly high. So there's also no order block here. So this 4-hour bearish low, honestly, I would rather take the sells on US 30 at 38,600. So yeah, so I'm not going to take this trade. But just for the sake of what time? It takes 7 minutes. So we'll see how it goes, but I won't take this trade. But I just want you guys to observe what happens. Now, there's sometimes you'll take this trade and it goes straight into profit. But again, that's just where you guys come in and see, do you have any selling confluences here? But I want you guys to observe what happens when I hope this trade does validate, but I want you guys to see how this trade would go if it does. But I'm not going to take this trade. There's nothing based off of the zones, based off of the order blocks. Nothing for me to take there. 30. Okay, there's a 30-minute gold. Here there's a 30-minute gold setup. This is 2032, 2031.3. There's this double SAR zone here. Double SAR zone there. But remember, right, 2035, 2039 is our target for gold. We want gold to go to 2035, 2039. But here we do have, so
If you
when I'm
zoom
taking,
out, you're gonna see price took off from there too.
yeah.
I think last week, like to the
Um,
downside, it shot down. So it
rejection.
might be a good place to sell, but being on what you said earlier, maybe not.
Yeah. Pending test and rejection, save as test and rejections. All right. So let's look at this here. So I'm not, again, won't take this trade. Again, we just want to see price action, right? We just want to see price action in this zones and see how price is attracted to, right? This, what we call smart money sellers or smart money buyers. So here, this is again, I'm not taking this trade. My zone to sell is 2035 or 2039 region. Now here, we have on the 30-minute time frame, we have a pending. So this is no longer pending. So it already validated. So if you can see, this is your test candle. This is your rejection candle. Okay. This is where the trade validated down here, right? Now for this trade, this trade you'd have already been at break even. So look, this trade you'd have gotten taken out at break even because the trade would have achieved a 1:1 risk to reward. So this is another reason why sometimes I'm not in a rush to trade because like for example, one of the reasons personally, again, this is just me. I'm not saying this happens to everybody or, everybody who uses my strategies, but the way I trade, when most of the times when I was taking trades during London or pre-New York, I was ending up at break even. So I'm like, okay, I woke up, spent all that time just to end up at break even. But this trade would be at break even and you'd have already been taken out at break even. I was hoping it wasn't at break even or wouldn't have been at break even. Yeah, but anyway, but this is only if you entered despite the overextension. Now let's look and see if this entry was overextended. Now, how far? Our stop loss is 30 pips on gold. The SAR zone relative to where the trade validated was 10 pips. So to me, 10 pips is what? That is, and I tell you guys,
30% of
yeah,
euros.
30% of your stop loss. So for me, if this difference is like 25%, I would say 25% and above or something. To me, that's a red flag because most of the times you end up getting stopped out. So this is the reason why, like you guys saw me draw the distance on US 30 so that at the very least I know where would somebody be at break even. But anyway, so this trade would be at break even and you would have gotten stopped out at break even if you waited. Now, somebody like me who might have waited for retracement, at this point, I would have already deleted this because I know somebody who entered the actual trade without caring about overextension would be out at break even. Then I wait for a new trade setup.
It was CPI. That's what that's the
It
same place CPI dropped from last week.
dropped, here,
So do
like
you
around
think
that
anyone would
zone.
be holding that trade still?
Dude, if anybody's holding a trade for 40 pips in profit and they come back at break, unless I don't know, there are people who are crazy, man. But there are people who do that, but then their stop loss is probably like 2100 or something, and their TP is
Oh,
maybe
okay.
like 1850. So they're like,
All right.
I'm holding this shit for the whole year. So
All
that's
right.
probably like that. I mean, heck, I'm in US 30 cells. I've been in US 30 cells since like January 15th or something, and it's just annoying. We might get this 30-minute setup on US 30. Okay, look at that US 30 pump. See? Exactly that US 30 pump right there. So if we do get this 30-minute, and it's also CP, no, this wasn't the CPI drop, was it? No, maybe? No, this was Monday. This wasn't the CPI drop. So for this US 30 trade, for me to take this trade, I'm liking this trade setup. For me to take this trade, I need US 30 to pump a little bit more so that the entry, this candle closes somewhere around there. But US 30 is on the 15-minute, on the 30-minute, it's pretty bullish. Pretty bullish. You can see the candle colors, right? Because remember, on our indicators, we change the candle colors, or there's an option to change the candle colors depending on momentum. So we can see these candles are green. So 15-minute, 30-minute, fully bullish. But let's see where this candle closes in the next hour 45. Okay, so as we're preparing for this, as we're preparing for this, let's look at where our zones are here. So look at that. It's coming. We have a 4-hour bearish low. That's good. So we know we have an order block there. And I think we'd gone over that, right? And then our zones. So this is nice. This is fine by me. So this is a trade. This is what I want to see. Compared to where was that? Compared to the 15-minute time frame where we didn't have any zones here, when we turned on the zones indicator on the 15-minute time frame, you see that pump is because all these buyers, it took away all these buyers. There's no sellers here. So there's no sellers that are bringing or holding price down. So guess what? If any selling pressure is supposed to take place, it's supposed to take place around this zone, which culminates to our 30-minute chart on our right. So that was a red flag on, and I'm glad we see. But anyway, this trade did not validate, right? The 15-minute setup did not validate because the break candle, yes, validated, but the continuation, okay, 33 seconds. So I will be taking a sell on US 30 if this candle closes below here. For you guys, risk zero, nothing more than 0.75% per trade. Personally, of course, I am risking 1% per trade, but I need this candle to close next to my zone. I don't want it to close so far away. I don't want it to be like overextended. So like I want it to come back a little bit further up. Let's see, US 30. We do have some heavy buying pressure, but for me, this trade makes sense. Okay, just hold. I am still not in. I want it to come and tap in. So I want that. So I'm still not in the trade yet. So this 15-minute trade, so I'll turn off the zones. I want it to come back up a little bit. This 15-minute trade, the continuation candle closed above our SAR region. So we go ahead and delete this setup. Since the 15-minute did not validate, the 30-minute validated, but I'm still waiting for price to come back up. It's not that far. It didn't close too far up, 96 to 404. So that was like an 8-point zone. So not too bad, but I want price to come back just a little bit more, and I hope we get that. But again, of course, you don't have to wait for me to enter. But I'm still not in just as of yet. So this is what I am waiting for around this zone.
Man, this is growth because normally when you be like, I will take this trade, I'll just enter.
No, yeah.
I didn't
See
enter yet. I'm
the
waiting
what?
because
Yeah,
I'm
the
not
worst
trying to trade
part.
no more today unless I have you know what I mean? I'm trying not to, honestly. I was
Yeah.
trying not to trade today at all, but I seen that and I just took it
I mean,
earlier.
this one's a nice one, but I want it to come back, and maybe it's not gonna come back. Now, the worst part again, so remember, the same thing applies. If you get so let's mark where somebody would achieve a 1:1 risk to reward. Uh, I need it. I do see it coming back up. Now the question, I need it to come back up before coming to this zone. And that's where we had the OB, right? I think it tapped the OB exactly. No, this first candle tapped the OB exactly. Just need it. And we do have huge selling pressure here, I can see, but I'm just waiting for it to come back. Now, this is where, like, and I haven't gone back to using my EA, but this is where, like, I'm telling you guys, this is where I would just be doing sales only. Like one thing, and I'm still working on this one strategy, and it doesn't have to be my EA, any EA in general. Like personally, I know US 30 is going down, right? So my plan would be every day. So like this trade, every trade I'm risking is like I'm risking 1% per trade, right? So one thing I do plan on doing is every day I allot time during the live session, right? So I have an account and then I run the EA on. So again, I have my own EA, it doesn't have to be mine. But the logic is if you know that US 30 is supposed to go down, if you know, okay, of course you can know, but if you have high probabilities that US 30 will go down, guess what? Before the live session or during the live session, you just turn on your EA. And then if you normally risk 1% per trade, you do the same risk with the EA. Now, the fix is that don't carry trades over past that day. So the goal would be you do your daily drawdown or your max drawdown on that EA to be 1%, and then you turn it on, you trade it for like what? I think worst case, even though sometimes we are a little bit wrong, the price comes back down maybe at 3. Fudge. Okay, we would be at a 1:1. So I don't know if anybody caught that, but I didn't get a chance to take it. But you'd be almost at a 1:1. So again, this is why I tell you guys, you don't have to wait for me to, it just depends what overextension means to you. For me, I wanted that tap into that zone. And you can see here, like, just what was it? 8 points. 8 points kept me away from being almost at break even. But again, all is not lost here because I don't think you would be at a 1:1 just yet. No, you wouldn't be at a 1:1 just yet. But yeah, this is some of these things. Like if you're waiting for that perfect entry, sometimes you'll miss a trade. But anyway, if it doesn't come back up, and looks like it would be at a 1:1 risk to reward just now.
Was you waiting for EU sell?
Yeah, but in the momentum. For the momentum, but we need that in the next 25 minutes. But doesn't look like we'll get the momentum entry. For these other entries, we didn't have any SARs on the 15-minute and 30-minute. So, and on the hourly time frame, we have a test and rejection, but you can see it's so overextended. Okay, so this person, or we would have been at 1:1 risk to reward. But what I'm happy about, I don't feel bad I missed out on this. So this, so of course I'm not gonna count it because I did not take it. So I'm not gonna count it as an official trade. But
It
the
still
major,
might come and take out those sellers and go to that other order block. So
yeah, but at the very least here, we would be at break even for this trade. But one thing I'm happy about, you see the difference that I showed you guys here? We turn on the zones there, we turn on the zones here. We turn on the zones here. So the difference between, even though this other trade did not validate, but let's just assume this trade had validated, right? Let's assume this trade on my left had validated, this US 30 trade. You can see you'd have immediately gotten stopped out. So let's assume, right? Of course, it did not validate, but I just want you guys to see the visuals. If this trade had validated, you would have gone out, gotten stop hunted. They pick up liquidity from that zone. And guess what? Now you would be back at entry. Compare that to this trade. This trade was perfect. Our double SAR zone was next to sellers, right? The double SAR zone we are trading, we had a bunch of, oh, not a bunch, but we had a sell zone there. So look at what price did when it came there. Rejected all the way back down. That is the kind of trading you want. It will be a quick trade. So that's the difference. So I don't feel bad I missed out on this. Sometimes I just want to get because if you guys have traded with me for like what the last 2 weeks, we were most of these losses, we were just getting stop hunted and then price literally comes back and melts down. But it's just like abundance of caution, and I really don't want to edit my TP and stop loss settings. The TP and stop loss settings I have 15 pips stop loss, 1530 for EU, 15 pips stop loss, 30 pips TP, 50 points stop loss, 100 points TP for US 30 pips stop loss, and 60 pips TP for gold. So that has been working for me for like a year or half a year now. So I really don't want to edit that out. But this little stop huntings, this is what I know I'm trying to avoid, because I know that that little 9 points right there sometimes does make the difference on whether we hit break even or even stop loss or even TP. But the major thing I want you guys to take away from this session, as much as this trade, I don't know, hopefully somebody caught it, but as much as I didn't take this trade, this shows you the power of even back testing, because this whole weekend I was like, man, I've been trading US 30 for like 3 years daily, daily, daily. Like, how do I take a loss on US 30 every time for 2 weeks? I came back, I was like, hey, every time I was either buying or selling, it was either in no man's land, or I was, buying where we have sellers, or as much as, right, we're using the SAR, but adding this other confluence on top of it, it's just a game changer too. And again, this is what we used to do trading when we first started last year, but I just stopped using the zones indicator and markups indicator. But anyway, yeah, so other than that, I really, hopefully, if you guys have any questions, if there's anything you don't understand, if there's any strategy you do not understand, feel free to ask. But right now, mm, there is nothing really. But just put alerts for gold at 2035, 2039, and watch for price action in those zones. Uh, this one, yeah, there's nothing really that might validate before we end the live session, because even though this trades validate later, we need to wait for a retracement. So that's just will take a little longer. No momentum entries. Even this EU momentum entry seems to, I don't think it will validate, because you can see the HMA has started moving down. So I don't think we'll get, you can see even the sell signal disappeared. So we might not even get this trade here. But yeah, if I do get any other trade setups, I will send them to the Discord. But this was a nice one. Looks like price is coming back to break even. Yeah, there's
I
really,
just zoomed down and it might be accumulation, manipulation, distribution to the upside.
yeah, because you see this zone right here, 640, this whole zone here, this zone, or if it breaks, if I don't think it will break back up to the all-time high. I'm hoping it doesn't, but yeah, this zone right here. Let's see, where do we have another double SAR? So this one, the most optimal one is, let me redo this ones. This one is not more than 679. Yeah, so this one right here. So this might be the next zone. So either the same zone, because it can, what can happen, it can come up here, break above, stop hunt, and then do a break and continuation entry here. So it can do like a break and continuation there. So, but what we've seen here is that this zone is critical, but all is not, actually all is not lost, because if you guys see here, this is a valid momentum sell. If this candle in the next 18 minutes closes with a sell signal, or in short, closes as a bearish candle, the current 30-minute candle, what we'll be setting up is, so if you had taken that trade, you'd just be getting kicked out at break even right now. So again, even though we didn't take the trade, or I didn't take the trade, I didn't miss anything. So anybody who took that trade, you'd be at break even. Now, let's analyze what we have here. So let's get rid of that. So we had test and rejection. Now, what else can you see here? The rejection candle is now the test candle, if that makes sense. So previously, this candle right here was your test candle, and this one was your rejection candle, and the entry was there. But now your rejection candle is also, for a new trade setup, is your test candle. The current candle is your rejection candle. So in the same zone still, we still have another trade setup. For the same zone still a test and rejection setup, test and rejection sell. And then, of course, you would want this current 30-minute candle to close below this zone. If the current 30-minute candle closes either inside this zone, this double SAR zone, or closes above, then your test and rejection setup is invalidated. So there's still another trade setup, same zone, same area, same similar setup to the other one. And I wouldn't do anything different. I'm not going to hop in on impulse. I need price to close. At the very least, I need this candle to close next to that zone. And then other than that, there is also the current 30-minute candle as well. If it does close as a bearish candle, it will be a valid momentum sell. Why would it be a valid momentum sell? Because the previous, it's not the highest candle of this move up. So the reason you don't want it to be the highest candle is since you're looking for a sell, you don't want to, you want to start seeing, what is it called? Lower highs and lower lows, right? So that's the reason you don't want it to be the highest. Same thing for buys. For buys, you don't want the momentum signal candle to be the lowest candle of the retracement. The reason is you want to start seeing higher lows and higher highs. So if this candle closes as a bearish candle, this will also be a momentum sell that goes. So I'll stick around for those 15 more minutes and see what we have and see if we can get that one. On the 15-minute
Not, not to
15-minute
cut you
time
off,
frame.
advising,
Mhm.
that zone above, that's at 386.80.
Mhm.
That would also take out yesterday's high. So it could just do that and then melt too.
Yeah, but you see here, there's really nothing, there's not a bunch of concentrated sellers. You see in between our stop loss, you see this whole zone of sellers here. This is heavy. And also we have a 4-hour bearish order block here. So what this shows is, so remember what happens around order block regions? They normally manipulate it. So we know we have a 4-hour bearish low here. But normally price does not always reject from it. Price can come back up, stop hunt, and then come back down. Turning on the zones indicator, see this heavy zone here. This is what I like, this zone. So we know that this zone has a bunch of sellers. So I'm liking this zone because it's supported by a 4-hour bearish low. Also, that's the last zone that has supply. So what is it called? Supply zone within a supply zone, or sellers within or more sellers concentrated in that zone. But if US 30 breaks here, what's the next probable zone? 38,780 region. That's the next area. 38,760, 38,770. Because if US 30 breaks here, even though we have sellers sitting here, the area that sellers are concentrated is here. So it's all a probabilities game. So you look for where is the next darker shaded region of a supply zone or of a demand zone. We have a trade that's going on the 15-minute time frame right now. So wait, let me get rid of that because 15-minute time frame, we have a test and rejection trade that just validated, but I'm not taking the 15-minute trade. Let's see, wait, actually, this is the 15-minute trade right here. So now we do have sellers there on the 15-minute time frame. So here on the 15-minute setup, let's see, this is test and rejection setup. Test and rejection sell. So it's no longer pending. It has already validated because you have your test candle, tested your SAR region, your rejection candle, right? And then you do, of course, the trade was overextended. You mark up your where somebody would achieve a 1:1 risk to reward, which would be there. So right now, what you'd expect is price to come back and fill you in. so that you write price back down. US 30. So this is exactly what you'd have expected. Now the question is, would you rather take the 15-minute setup or 30-minute setup? Personally, I will wait for the 30-minute setup over the next 12 minutes, but they're in and around the same region. So they're in and around the same region, but 12 minutes, and they're going to close at the same. Actually, no, this one is either going to validate or invalidate at the same time. Let's see what happens when US 30 comes back up here. I might take this 15-minute entry, but hopefully you guys can see the tests and rejection, right? This is your test candle, came up, tested your SAR region, and then this is your rejection candle, came also closed below. So rejection candle does not have to test your SAR zone. Only the first candle, even the break and continuation one, only the first candle has to break. So the second candle just has to close either above or below, depending on the direction. And then, of course, your entry would have been down here. That's where the entry would have validated. But again, ask yourself, relative to where your entry is, where is your SAR? Your SAR is like 80, 90% of your stop loss. So you wait for retracement, but again, you also draw a 1:1 risk to reward where somebody would have entered. Let's see this one. I want to see what happens when price comes back up there. But we are also forming, even on the 5-minute, we are forming higher lows. So it might be it might be flashing up to the upside. But I want to see what happens when it does come back up there. See. Gold. Gold. Liquidity died out on gold. Oh, interesting. Ew. All right. I don't know what happened to this microphone. It keeps dropping. All right, so just hold. Let's see this. I'll wait for the 30. Both of them, so this one has already validated. Again, if you prefer the 15-minute, that would be it, but I will take the 30. I think the 30 is safer. The reason I think, again, right, not in this trade, let me clarify. The reason the 30 is safer to me, I would rather this trade gets invalidated and price goes up here. So this is a valid trade, but if you look at your MT4s, look at those higher lows on the 5-minute. We do have an uptrend on US 30. Also, we are fully bullish on the 15-minute and 30-minute. So again, no need to rush. No need to rush anything. You can see these candles are green. So not to say that it can come down from here, but same thing. If you guys remember, if you have candles that have validated multiple test and rejection zones, right? It's better to go for the optimal test and rejection, zone. So for example, if you're looking for sales and 2 candles have validated 3 test and rejection zones, of course, you want to wait for price to come back to the highest SAR zone. Same idea here. This test and rejection, you have a 15-minute and you have a 30-minute. Remember, a higher time frame with my strategies, higher time frames trump lower time frames. So it's better to wait for a trade from a higher time frame than rush to take a trade in a lower time frame. So for me, for this trade, I would rather take this 30-minute setup and not this 15-minute setup. But the 15-minute setup, if I didn't have this 30-minute setup on US 30 right now, I would be in the 15-minute US 30 sell. I don't see any red flags on the US 30 sell. We do have a bunch of sellers that are sitting here. We do have a 4-hour bearish order block, bearish low where price currently is sitting. But it's just a matter of, right, if somebody gives you two options and one option looks to be more promising, which one do you, or more probable, which one would you go for? So for me, for this particular trade, I will wait for this 30-minute trade setup. And if the 30-minute trade setup lines up, guess what? It's going to line up with this 15-minute entry, because what can happen here, this 15-minute entry can be stopped out or stop hunted. And then in the last few seconds or few minutes of the 30-minute time frame, you have heavy selling pressure stepping in, and we get that confirmation we want just below this 30-minute time frame. So again, it's just a matter of patience. But yeah, this 30, again, I'm not in this. Let me put it here. But I want you guys to observe it. I don't want to leave it on the chart just in case nobody jumps in or whatnot. But I want you guys to see what may happen here, because what may happen here, we have 6.5 minutes before this 30-minute candle closes. But in those 6.5 minutes, they can stop hunt this 15-minute trade. And then in the last 2 minutes of the 30-minute candle, bring price down and give us that entry we want, like right below this region. So again, it's better to end the day either at break even or without any trade, instead of jumping in a trade and then you start feeling that, oh, maybe I could have done something better. But anyway, let's just see how this particular one goes. The liquidity on gold is literally dead. I don't know is anybody still holding? Remember, I know we were trading this gold on this particular day here. I don't know if anybody, I think on the live session when we did buys at like 1986, 1982, that was a nice one because we had daily bullish order block around this zone, right? If you guys remember, this was a nice trade that day. We had that daily bullish low part. But look at where gold is, right? We have that daily bearish low and that daily bearish high. So but that was a nice little one last week. Let's see. If this 5-minute, if this 30-minute does not validate, I may, and this 15-minute is still going, so long as it's in and around here, I might then hop into the 15-minute one. Because remember, for me personally, I do max 2 trades a day. I don't have to trade every day, but if I do see opportunities, I'll take them. So if this 30-minute does not validate and this 15-minute is around where it is, I'll probably hop into it, knowing that that's one of the trades for my day. And I don't really see, I'll probably not trade anymore during the day because I don't see any other trade setups. Maybe this, yeah. Because for gold to come back to 2035, 2039, that will probably be maybe Asia or London. So, and there's no momentum trades. Yeah. So if this 30-minute does not validate, I know we have a valid 15-minute. So that will probably be my one and only trade for the day today. So we have four more minutes. Yeah, if you guys have any questions, feel free to ask. And there goes the 30. So you see what I was saying, the last 2 minutes? And you can see on the 30-minute time frame, we're coming back down just below that. That is exactly where I want this candle to close. Now, the worst part is that this candle can turn heavily bearish at any point right now. And I do not want that to happen. Um, Yeah, see that I don't want it to come on, come on. 2 minutes, 2 minutes, 40 seconds. I don't want it to turn too bearish just as of yet. So that's those sellers that we saw there, and that's that 4-hour bearish low. Right. 2 more minutes. So I want it to hover over where it is right now. Like I want it to stick to where it is right now. So one more, 1.5 minutes. Right there. And we want to make sure it has to close below that line right there. So if we go back, turn on the zones, look at our zone. Remember that zone I showed you guys? This zone right here. That's exactly where the rejection is at. So even though it doesn't close here, so remember when I was telling you guys, I would, if it doesn't close, if it doesn't validate on the 30-minute, and this 15-minute is above this zone, like where that rejection is coming from, I'm gonna hop into that trade because I can see that rejection, right? And even within that huge rejection zone or that huge supply zone, you guys see this zone right here, this region that's right here. That's a supply zone within a supply zone right there. So whichever comes first, either going to be taking the 15-minute as is or the 30-minute, and looks like they will line up. So we have 19 seconds. Again, for you guys, nothing more than 0.75% unless you know or you're good at managing your risk. Personally, I'm always doing 1%. Because I know even max, I'm doing 2 trades a day. Okay, I will sell US 30 now, 50 pips TP, 50 pips stop loss, not based off of, no, 50 pips stop loss, 100 pips or 100 points TP. So 50 points stop loss, 100 points TP based off of this 15-minute entry right here, and based also off of this heavy supply zone that I know is in there. And that will probably be my only trade for the day today. Yeah. All right. So let's see how this goes. Definitely, I know we had that buying pressure. So we'll just see how this goes. So this 30-minute time frame, this 30-minute setup ended up being invalidated because the test candle was valid, but the rejection candle closed above. So at this point, we end up deleting. So that's why I said, even though that 30-minute setup does not validate, I would hop into the 15-minute setup if it was above this zone and wait for that selling pressure to kick in. This one that's right there. I can get rid of this. And also this 30-minute is still this zone can give you a break and continuation, right? So this zone now, because test and rejection, if a test and rejection for a cell comes when the SAR region is above it. But if the SAR region is below price, the setup that you would get would be a break and continuation. So here you can still get something like this, break, continuation, and then get something like that. So this zone is still valid. It's only that that one trade setup wasn't valid or was invalidated, but the zone becomes valid, ideally perpetually. So there's always two trade setups, either break and continuation or test and rejection. So you can still get a 30-minute setup here, but again, you'd have to wait for like another hour or something. So we need that. So here, what we need, so we already know there's sellers there and price is going up or going down, so that's good. We need the 4-hour bearish low to be activated. So we know that the 4-hour bearish low is right here where price is at. We need that link. We need this 15-minute candle to close below this 4-hour bearish low. Now the only issue here, it might be doing like a break of resistance and retest. But anyway, we need this 15-minute candle to close below here. If this 15-minute candle closes below the here, we will get a big spike in liquidity to the downside. But on the other hand, if you guys normally trade like supply and demand or support and resistance, they may also be doing what? They broke the resistance, retest, and going up, right? But anyway, for me, when I'm trading one direction, I don't try to find reasons why my trade might be stopped out. For me, so long as a trade setup makes sense, then I really don't care about like either losing or whatnot. The best I can do is to come back later on in the day and ask myself, is there anything better I could have done to avoid that loss? Then if there's nothing better you could have done, then there's no reason to either be afraid or whatnot. So personally, I'm up like 900. Because remember, for me, I do what 200K account. So 1% to me is 2K for this account that I'm using. Right. Man, okay. Oh, also looks like my entry was a little bit above this where this is shown. My entry is somewhere above here because I'm still in profit right now. So I think my entry is what? 38,652. Wait, oh, that's a big discrepancy. Maybe I guess spread worked in my favor. Yeah, but my entry is somewhere above here still.
Got a little more confidence in the trade on the 1 minute. It's a triple top. So
Oh, on the
it
one
hasn't went
minute.
over that point yet. It just almost went over, but it came back down.
Yeah, there's I don't know there's people that are propping US 30 up. I would have expected it to drop by now. Like they've been propping it up every time it falls. I'm not sure what event they're waiting for because we've had CPI, we've had FOMC minutes conference, we've had NFP, and every time it drops, but there's just some
It's
player
just
who
because they
is,
know everybody is expecting it too. So they
yeah,
might
I'm
try to
just,
creep it in London and Asia one of these days too. Watch.
and the day it's gonna melt is gonna melt for like 2 months, man. Because I'm just hoping not to get squeezed out of my small lot sales because they came a little too close. Yeah, we definitely have some selling pressure here. But I need this 15-minute candle to close below here because we have like 5 minutes. We need that 15-minute candle to close below there. Mm, mm, mm. Mm, mm, mm. Mm. Come on, US 30.
Yeah, no, it should melt. If it wasn't going to, it would have already violated that triple top like crazy because it literally came right close to it. They went back.
Yeah, because if we get a close there, because that's when the bearish low will be activated. Because right now they've picked up the sells. Question is that bearish low, that's what needs to be activated. Uh, what else do we have? Gold. Nothing still on gold. 1530
It's
EU.
coiling into one of those triangles on the 1 minute on US 30. So it's probably gonna either spike up crazy or spike down crazy.
Plus, the beauty here is this dollar. So the dollar is coming from support level, so that's good. That's also good for US. But I mean, in the last 2 weeks, when the dollar was going up, US 30 was going up as well. So, I mean, I know they're not always correlated. Mm, 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 mm. Right. 2 minutes. We need that closure below. Mm. Okay, there we go. We need this to close below for in 20 seconds. There we go. So we need that push. And you can see the candle is possibly changing to a bearish candle, to a red candle. So we need that. Let's see, looking still bullish on 15-minute, 30-minute. Gold is bearish. 15-minute, 30-minute. EU bearish. 15-minute, 30-minute still a little bullish, but we're getting that bearish. Step in for the market. So for this trade, so currently up 1K on this trade. So I got a higher entry. So if you guys entered exactly like me, I think your entries you'd be further in profit, because my entry is a little higher than this. I can't really correlate price, but right, let me go to the 5-minute. When we bought or when we sold, interesting. Somewhere around there, just a little bit there. Um, see. Um, man, come on, come on. All right. I don't know if anybody has any questions, but I'll be calling it a day. However this trade goes, so remember, if you achieve a 1:1 set break even, because price is just going pretty much up and down at this point, but if you achieve a 1:1 risk to reward, go ahead and set break even. For me, I've automatically set up my trade manager to do that. So I'm holding this trade, whether it's stop loss, TP, or break even. I'll send the results in the Discord, whatever happens. But unless we get a nice huge spike up, because right now we've picked up the 4-hour bearish low volume. We are retesting the 4-hour bearish low. So you can see we broke the 4-hour bearish low. We are retesting it. It just might take a little longer than I would want.
Bison,
But
real quick, could you tell
Mhm.
me how to do that on the trade manager?
If you right click, let me think this through. On the trade manager, if you click on, you see those little icons on the left column. The second icon from the bottom looks like a shield, right? The bottom one is the settings one.
Okay, I see it.
The shield. So it has break even. So if you turn break even on for US 30, depending, so 50 points for me shows up as 5,000 pips in there. For gold, 30 points is 30 or 30 pips shows up as 300 pips in there. For EU, what I call 15 pips is just 15 pips. So maybe I should start calling sometime different, this pip calculation. But anyway, yeah. So it's on EU, 15 pips is 15 pips. On gold,
Do you know how the trailing stop works?
nope, I've never used
No, right?
that. But it would
Yeah.
be okay. So I've used it on other applications. So let me think this through. So if you put, let me do this here. Let me probably do this. Let me take a screenshot of this and share this instead. And there goes US 30. So nice, nice, nice. Let me stop sharing and share the trade manager real quick. Stop share.
Because the more things I can make mechanical, the better for me. So it takes the emotion of myself out of it.
Yeah. Snipping tool. So you can see this, right? So
Yeah.
that's the snip. So if I remember correctly, so if you put start, so if you want your trailing stop to start at 30, or I guess in this instance, it would be 300 pips, which is a $3 move on gold. So you do 30 pips, 300 right here. You do 300. Shoot, that's a lot. You do 300 right there.
I get that part. I just don't understand the trailing part
Okay, so trailing. So
in this step.
trailing. So trailing is the distance between your start. Wait. Trailing. Um, so if you start at 30 pips, I've done this and it's normally, I haven't done it on this one, but I've done it on a similar thing. Let me think this. Step is, wait, let me think about it internally first. To start is when it's gonna start. And then trailing versus step. Start. Man, I don't know. Nowadays my brain is so slow. So step is the distance between your start. I would say just try and error, but I think step is definitely so after your trailing starts, so let's say your trailing is 300 pips. And step is every 100 pips. Man, I need to go back and think how I did. I think I wrote it down somewhere. But it's trailing. Wait, let me open. I don't know if I still have this EA. Where was it? It was EA for, it was a trade copier. It was a trade copier. Give me 1 second. I think I have this trade copier. No, it's not that. It's not that. Yes, yes. Give me 1 second. I have this trade copier which has that. So, okay, break-even parameters, trailing parameters. Okay. Activation points, it would be that much in profit. Next step. Huh. That doesn't help. I would say do try and error because I'm thinking of two different things. Because step is normally, so the question is after, like how to gauge this too, you want your trade to first come into break even. So at what point is it gonna trail? So if it's trailing, it's starting at 300 pips. Okay. So for 300 pips, you want it. I would say try doing start, like if you're doing gold, just do like a 0.01 lot or something. Do 300 pips or even 100 pips so that you can get the results faster. Do 100 pips for start. So it means it will start trailing at 100 pips, or if you're like $1 in profit, and then do 200 pips for trailing, and do like 50 pips for step, and you'll see the difference. Because I'm thinking also of a break even thing, which is different from here. Yeah. So try that. Just do try and error. Do like a 0.01 lot size. I think that's how I haven't used this in like maybe 6 months, so I can't. I'm having a brain fart. I'm trying to remember. But do like a 0.01 lot size and do like 100 pips here, which will be a $1 move, and do like a $200 with trailing, and then do like a 50 pips here for step. And then observe what happens when your trade is like 100 pips in profit. Watch what happens, and then that will tell you like how to utilize it. I can't quite remember it right now, but yeah, but try do like a 0.01. It took me when I was trying to figure that shit out, it took me like like
All
a
right,
long
cool.
time.
Yeah,
Um,
no, I can imagine.
yeah, it's an but yeah, because the caveat is the trailing stop and the steps and the step. Because one of them is the distance between where price is at and where you're trailing activated. But I can't tell, I can't remember which is which. So looking here for US 30. We are drop. Oh, I think it's at break even, right? So you should be at break even for US 30. I'm at break even. No, I'm not at break even. Oh, yeah, I'm already at break even for this trade because if you look here for the blue line, we already achieved a 1:1 risk to reward. So if you're in this trade with me, go ahead and set break even. And hopefully, like this trade had barely any drawdown. Hopefully, we caught that nice high. If not, that's fine. But you should be at break even for this particular trade. But other than that, unless anybody has it, and look at this 30-minute zone I was telling you guys about, right? You can get another break and continuation possibly here. But yeah, so this will be the trade for the day. I don't see any other trade. Based off of how gold is reacting, it's going for that 2035, 2039 region. So I don't think I want to play with that for now. But here, tests and possible break and continuation. Yeah, break and continuation entry. This validated for anyone who wants to catch this. But again, for me personally, I'm looking to take gold at that 2035, 2039 region. So this trade did not do a 1:1 risk to reward just yet. So this is the break and continuation. So 1:1 would be right here. So you would want something like this. The other thing to keep an eye out on, look at this higher lows. If you guys see this higher lows on US 30, I'm sorry, on gold, I hope you guys can see that little trend line developing, right? So this is probably telling you that gold is going back up, but this would be a trade setup if you're just trading the break. This is your break candle. This is your continuation candle. Trade validated down here, but of course, red flag overextension, distance between entry and your SAR. So you wait for retracement. You mark up where somebody would have achieved a 1:1 risk to reward. And then whichever comes first, you'd anticipate that trade comes back to you. But for this particular trade, honestly, look at those higher lows on the hourly time frame. It's telling you that gold might be wanting to push back up. So for today, probably US 30 will be my only trade. Oh, we might be getting, look here, or US 30, we might be getting a test and rejection on the hourly as well. So here on US 30, same zone where we entered. If price was to come back here, we would get stopped at a break even. But if you guys can see here, I'm hoping it doesn't come back up, but we have a possible test and rejection entry here on US 30 on the hourly time frame as well. So I think today we have enough trade setups, test and rejection, sell, pending. All right, but anyway, I don't know, in case anybody else has any questions, feel free to ask. If not, I will catch you guys tomorrow for the next live session. And I'll update this this US 30 trade, however it goes in the Discord. So hopefully we get that full TP. Now this one, if you get full TP, if you're risking 0.75, as I said, you'd be up 1.5% for just today. But anyway, let's see how it goes. All right, guys. If you guys have any questions, you can ping me in the Discord, and that should be it. All right, see you guys. Peace.